we see that growing, and we expect it to grow to about 2% in the next by 2020.
As to add on, we've basically seen developed markets like US, where I think it's about almost 8 to 10%. So we still have a scope in that way. So
and
yeah.
to add to this, we also expect that the growth rate in the economy has bottomed out, and the forthcoming years, the economy is expected to do well, and especially on account of the elections and all, and various parameters that we have discussed. So generally, this industry is expected to grow at 2x of the GDP. So we expect the GDP also to rise in the forthcoming years as a result of this gap increasing in revenue.
Lastly, advertisements in tier 2 and tier 3 cities have just started. So we expect there would be a growth further in that.
Regarding the modes which you have, or the portal analysis which you have done, threat of substitutes, can you elaborate more on that?
Yeah, actually if you see the price differentiation between the newspapers is not too much, and also if you see the content, if you talk about any news, so it would be the same in both the newspapers, as in whatever the headlines was yesterday would be on the newspaper. Hence there is not much product differentiation between the products, and hence we have given that as a danger, as to there's a high competition.
That will come under the different course of competitors. Regarding the digitalization which is happening especially in the developed market, what are the trends, and do you think that this company or the management is capable of protecting its existing business?
Regarding digitization, it has already started taking steps. If you see, they have an only online market, only online newsletter, which only gives online newsletter. And also, if you see, they have diversified well. That's what the others are not able to do. It has diversified into radio, it has diversified into online media, and hence we feel that it's better. It can tackle better the digitalization.
And to add to it, if you look at the digitization front, the DP Bhaskar's the online version of the newspaper, it is the most read Hindi website in India. So it has already captured the market very well. The only issue to look forward is that whether if it will be able to monetize its current readership, online readership into subscription-based.
Take on Chetan's question. Okay, what could go wrong with your recommendation? What are few things which could, which could result in the story not panning out the way you expect?
So one would be the growth rate in the economy coming down. Obviously, the way we have been seeing the growth rate in the economy, and we obviously, when we have valued the company, we have been optimistic about the economy also. And one is obviously the newsprint prices that we have already spoken about, that DB imports 40% of its newsprint from abroad. So one is the currency risk fluctuation that can happen, that we have already seen in the first half of FY 2014. So these are some of the.
And another risk for DP Corp is that with the increasing literacy, if people's preference towards the English newspaper shifts from the current local newspapers, so DP could falter in that in the long term. But as of now, it is already, the DNA is already the number 2 player in the Mumbai segment, and it is catching up in the other market as well. So it's this segment where it could face a problem.
What's the period you use for your FCFF model? And secondly, the terminal value compared to the total value seems to be quite high. Do you think, do you have a justification for why we should rely on your terminal value to derive substantial chunk of your fair value price?
So actually we have used two methods, that is, one is the BCF valuation and one is the relative valuation. And if you see, we have considered 7 years of high growth for DP Corp, and going forward we have gradually declined the growth rate with a terminal value of 5% from where the company will grow.
What is your terminal value? Which year?
Sorry?
The terminal value is of which?
The terminal value is from the 7th year.
From the 7th.
Yes, from the 7th.
You alluded to related party transaction and other businesses of the group. Have you done some work on that, and what's your assessment?
So when we saw the annual report and whatever that we could understand, there was a very minuscule part from which the revenues came from power, and that was something that we didn't really relate to. But the fact is that the revenues constituted only about, I think, 0.03%. So that was something that I looked at. But yeah, so that was one of the ways that I understood that, okay, maybe apart from the newsprint business, there was something else.
Besides the annual report, have you done some work on understanding what the group does, what are the other businesses, etc.?
Yes, sir. The one is obviously the power, and the second is that DB has opened some, it's also into real estate, like it is opening up some malls in the developed cities. So these were, like, to add to the previous question, these were also some of the related party transactions that we saw.
So in conclusion, is your assessment that they are using this company, which is a publicly traded company, as a cash cow to support some of the other group businesses?
So I think we have not analyzed their sister concerns. So because they have hands in power sector, textiles, mall development and everything, but we haven't seen their profitability. So
now also
not
that
really.
majorly it has two major subsidiaries. If you're talking about DB strictly, DB has iMedia, and this is so that is about 100% owned subsidiary. And there's another one which basically publishes Saurashtra Samachar, which is a 50% owned subsidiary. So from that point of view, we didn't see any transactions that were happening which was non-related to the newsprint. But then yes, we did see a lot of transactions that were happening internally, say for the purpose of printing, for the purpose of marketing. So that was something that we saw, but it was nothing alarming that I would feel that they're going totally digressing from their own business.
You looked at raw material as a risk. Have you looked at editorial staff turnover? How do they retain talent in the company?
So they actually run an institute for media, and I think that is one of the fantastic ways of succession planning in the company. So I mean, this is what we've understood of there.
Have you done any primary work as a reader to, in the various cities these newspapers are, talk to consumers, talk to corporates to advertise? Any primary feedback from consumers, corporates, etc.?
We have read the various newspapers. We have also gone to see the online newspaper. So something good that we found about the online newspaper was it's not the typical online newspaper that you get. So that was something good that we found, and no wonder it's very popular. Like if you see the newspaper, it's like your hard copy newspaper. You just zoom in you just click an article and it zooms in.
Thank you.
Good morning everyone, and I would like to introduce DB Corporation. We give a buy recommendation to it with an upside of 20% to 310 INR per share. Giving an introduction to DB. DB is one of the largest print media houses in India with presence across 13 states, 4 languages, 8 newspapers, 68 editions, and 199 sub-editions with brands like Dainik Bhaskar, Divya Bharati being their flagship brands, and promoter shareholding being of 75% being the highest. Going across with the timeline of DB Corporation, they recently had a major capex installation in 2009, which has helped them in their operational efficiencies, as well as recently they have gone to an online edition in UP and entered the online space. Coming to the media and entertainment industry, it is an industry of 821 billion rupees, growing to 1661 billion by 2017, and print readership is around 181 million.